Between July 2022 and March 2026, gold rose by approximately 200%. Not bad for a low volatility asset. Over the same period, Bitcoin delivered a similar rally, though slightly larger. It rose by 220%. But if we isolate one part of gold's advance, between December 2024 and March 2026, this was where gold truly began to shine. During that period, gold rose by 110%. Meanwhile, anyone holding Bitcoin saw the asset fall by approximately 40% over the same period. In an unstable and uncertain market, gold remains the protection investors turn to. The question is not to predict every rotation. It is to recognize when the relationship between Bitcoin and gold begins to reveal a stronger preference for protection or for risk. And that is what we will explore today. I observe, not instruct, for educational purposes only. Today, I will introduce another proprietary indicator I developed, Bitcoin Gold Rotation. The reading is simple. Above the zero line, Bitcoin is in a positive regime relative to gold. Below the zero line, the relative regime favors gold over Bitcoin. This is where we are now. What matters here is that once the indicator moves above 1.5, Bitcoin begins to look expensive relative to gold. The regime is still positive. But this is where the market may begin to show its first signs of rotating away from Bitcoin and back toward gold. In the same way, extreme lows below -1.5 suggest that gold's relative strength may be exhausted, while Bitcoin begins to look more compelling. Now, let us consider a simple historical exercise using this indicator. Imagine an investor holding Bitcoin only while it remains in a positive regime relative to gold, above zero. The path would not be smooth throughout. The investor would begin with a loss of approximately 6% before the following rotations had time to develop. Even so, if the investor had entered with $10,000 on Bitcoin's first positive reading, the capital realized after these 4 rotations would be approximately $112,000. That represents a cumulative return close to 1,020%. And according to the indicator, this investor would not yet have returned to Bitcoin. The position would therefore be approximately $112,000 in cash. Now compare this with buy and hold. If the investor had bought the same $10,000 at the beginning at approximately $5,830 per Bitcoin and simply held the position until this point, with Bitcoin valued at $64,800, its total value would be approximately $111,000. A temporary return close to 1,010%. In this specific comparison, the rotation strategy ends slightly above buy and hold, but the difference is small. Less than $1,000, or less than 1%. And the positions are very different. The rotation strategy would be fully realized in cash, while buy and hold would remain exposed to Bitcoin. That does not make either approach universally superior. We are comparing an all-in, all-out approach in one scenario against a single purchase with no sale in the other. There is no portfolio management between these two extremes, so I will leave you to draw your own conclusions. Now, could the same indicator be used to outperform buy and hold? This second exercise begins at another point on the chart, when Bitcoin was close to $5,130. In this strategy, we will treat every low in the indicator's extreme areas as a moment to consider a purchase. In other words, if price and the indicator form a low together, while gold is expensive relative to Bitcoin, our hypothetical investor would make a purchase. We will apply the same logic to sales. At peaks where Bitcoin is expensive relative to gold, the investor would make a sale, but extremes are not the entire reading. We will also consider divergences. In other words, if price continues falling while the indicator rises, we would treat it as a purchase. And if price continues rising, making a new high while the indicator falls, we would treat it as a sale. Recently, this strategy produced 3 potential purchase conditions, with Bitcoin near $85,000, $65,000, and $60,000. We will include these observations as part of the exercise while recognizing that the current movement has not yet ended. Now, we enter again with $10,000, but instead of selling 100% at the first opportunity, we sell 50%. From there, every sale and repurchase uses 50%, starting with a single contribution of $10,000. Here are all the movements, now considering the prices and total values of each transaction. Although this is still not an ideal strategy, it introduces some portfolio management. Now, in this context, by the end of the journey, we would hold approximately $193,000 in Bitcoin, while still keeping nearly $28,000 in cash. That represents a return of more than 2,100%, with a total value of approximately $220,300. With buy and hold, the investor would still be holding Bitcoin and would have approximately $126,300 invested, equal to the position's total value. Because the investor remains invested, there would be no cash reserved for repurchases, and the temporary return would be 1,163%. In this historical exercise, rotation 2 comes out nearly 75% ahead of buy and hold. In theory, buy and hold would need to grow by approximately 75% to reach rotation 2's current value if the rotation strategy were to remain completely still. But it is not standing still. Rotation 2 still holds approximately $193,000 of Bitcoin exposure, along with nearly $28,000 in cash. That compares with approximately $126,000 of Bitcoin exposure in buy and hold. Neither exercise is meant to declare a winning strategy. In the first, the rotation ended close to buy and hold, but in a very different position. After the final sale, the capital would have remained in cash and avoided Bitcoin's subsequent decline of more than 40%. In the second, the historical result was more substantial, approximately $220,000 in total value against around $126,000 in buy and hold from the same entry point. But neither reading is automatic. The indicator provides the context. Someone still needs to recognize extremes, interpret divergences, and make decisions while the market remains uncertain. Today, the indicator remains below zero. That does not prevent Bitcoin from rising in dollar terms, but it shows that its relationship with gold has not yet confirmed a change in leadership, and that is the change I will keep observing.